What does one of Wall Street's most influential figures predict about the future of the U.S. economy? JPMorgan Chase CEO Jamie Dimon is sounding the alarm bells on a possible economic downturn. But what exactly does this mean for you, your investments, and your future? Stay tuned as we dive deep into Dimon's economic forecast and uncover the potential risks lurking on the horizon. In today's video, we'll be exploring Jamie Dimon's recent warnings about the U.S. economy. As the CEO of JPMorgan Chase, Dimon's insights carry significant weight in the financial world. During a Morgan Stanley conference, Dimon expressed concerns about the fading impact of pandemic-era government spending and monetary policies that once buoyed the U.S. economy. He pointed out that while employment and consumer spending have continued to grow, there's been a visible weakening in consumer and business confidence, largely due to the lingering effects of trade policies and other economic challenges. Dimon has a history of cautious economic predictions, and his latest remarks suggest potential vulnerabilities in the economy that investors need to be aware of. We'll dissect his comments, discuss the implications of rising inflation and declining employment, and examine the potential risks associated with the booming private credit market. Jamie Dimon's comments at the Morgan Stanley conference have sparked considerable interest and concern among economists and investors alike. He mentioned the possibility of economic deterioration as the supportive effects of pandemic-era policies wane. Despite continued growth in employment and consumer spending, Dimon downplayed the significance of survey data indicating weakened confidence among consumers and business leaders. He emphasized that neither group typically predicts economic inflection points accurately. As for the economy's soft landing, Dimon suggested it might appear weaker than expected, with employment slightly declining and inflation marginally increasing. Additionally, he cited lower immigration levels as another complicating factor for economic stability. A critical area of concern Dimon highlighted is the burgeoning private credit market. While this sector has seen tremendous growth on Wall Street, it poses potential risks in case of a recession. Unlike banks that manage deals and subsequently offload them, investors dealing in private credit are exposed to different risks, especially given the current pricing and spreads. Dimon's stance is clear. Now might not be the ideal time to invest in credit markets, as the current conditions could lead to suboptimal returns. In this video, we'll delve into these warnings, offering insights into how these factors could shape the economic landscape and influence your financial decisions. In a recent commentary at a Morgan Stanley conference, JPMorgan Chase CEO Jamie Dimon shared remarks about the current state and future of the U.S. economy. He highlighted concerns regarding the potential weakening of the economic landscape in the coming months. Past government spending and monetary strategies, effective during the pandemic, appear to have lost some of their potency, leaving the economy vulnerable. Despite continued growth in employment and consumer spending, there remains uncertainty due to what Dimon refers to as fading advantages and the complexities introduced by past tariff policies. Dimon's perspective, built on years of experience, suggests that a so-called soft landing, often a goal in economic policy aimed to gently transition from growth to stable conditions, might appear weaker as well. He anticipates some decline in employment and a slight rise in inflation. Moreover, Dimon points out reduced immigration as another complicating factor, impacting the labor market's flexibility and growth potential. Dimon's insights also touched on the nuanced and potentially risky area of private credit. This sector has been experiencing significant growth on Wall Street, but in Dimon's estimate, it poses unique risks should a recession materialize. Private credit differs in nature for banks, which typically facilitate and then divest these financial deals, compared to investors who treat them as long-term investments. Dimon sounded a cautious note, suggesting it might not be an optimal time for fund managers to invest in credit due to current pricing and spread conditions. These factors contribute to an environment that warrants careful navigation as economic conditions evolve. This insight reflects the ongoing concern within financial circles about the sustainability of growth and the impact of financial instruments during periods of economic fluctuation. Dimon's observations seem to carry an implicit reminder of the importance of vigilance and preparedness in the face of economic uncertainty and the unpredictable nature of financial markets. Today, we've unpacked Jamie Dimon's latest economic warnings, shedding light on his forecast of a potential downturn in the U.S. economy. As the CEO of JPMorgan Chase, Dimon's perspectives are crucial for understanding the broader financial landscape. He expressed concerns over the diminishing impact of pandemic-era fiscal and monetary policies, suggesting that these once beneficial measures are now fading, potentially leaving the economy more susceptible to a downturn. Despite ongoing growth in employment and consumer spending, Dimon highlighted a disconnect between these figures and the underlying economic sentiment captured in survey data. Such data reflects a decline in confidence among consumers and business leaders, a trend possibly exacerbated by existing trade policies. Dimon, however, cautions against relying too heavily on these surveys, noting that they rarely pinpoint economic turning points accurately. One of the critical points Dimon raised is the notion of a soft landing for the economy, which he believes could appear weaker than anticipated, with slight reductions in employment and gradual upticks in inflation. In addition to these macroeconomic factors, Dimon drew attention to the growing private credit sector. While this market has been thriving, it harbors risks, particularly in a recessionary context. The difference in risk exposure between banks, who offload these credits, and investors, who seek long-term returns from them, presents a potential challenge. Dimon advises caution in the current climate, suggesting now may not be the optimal time for fund managers to invest in credit due to unfavorable pricing and spreads. These insights offer a comprehensive view of the potential challenges facing the U.S. economy and underscore the importance of strategic financial planning in uncertain times. As we move forward, keeping an eye on these developments will be crucial for both individual investors and businesses seeking to navigate the evolving economic landscape. If you found this analysis of Jamie Dimon's economic outlook insightful, make sure to hit that subscribe button and give us a thumbs up. Don't forget to check out our other playlists, Wall Street, Companies, and Investment 101, for more in-depth financial content. Stay informed, stay smart, and we'll see you in the next video.